Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 3rd, 2009. Well, folks, we're seeing that same flat type of market as we continue into the later portions of the Labor Day week or leading into the Labor Day weekend holiday. Now, what you're seeing today, folks, is really a market that's slightly positive. Yesterday we ended slightly negative. Today it's right now trading slightly positive. There's just not a lot of volatility. You got the volatility early in the day when there was volume. Right now you almost have no volume in this market. It very well could be the lightest trading day of the year today. The S&P is up 4, Dow is up about 36, and the Nasdaq is up 9 points. So a very, very minor move to the upside today across the board. Now, the keys for this morning. How do we analyze the data that came out this morning? There was some interesting data. What we got today was jobless claims. Jobless claims was the key data released that was put out at 8:30 a.m. Eastern Time. Now, how to read into this? Because we had 570,000 people filing initial claims for unemployment, basically, benefits. The key with that, folks, is to look at that number and is it above or below 500,000. As long as that number stays above 500,000, things are not getting better. In fact, it's actually surprisingly poor, in my opinion. I expected, considering these numbers were coming from last week, that this number would actually be much better, close to the 500,000 marker. Now, why did I think that? Well, there was a strong possibility that you have to look at the bosses out there as taking this week and last week as a holiday. Therefore, they're not necessarily laying off as many people. That did not happen. That worries me dramatically, for the fact of the matter is that if you still have that many layoffs, and we're talking about weeks where there's a lot of holidays being taken and stuff like that, that is very, very sketchy and scary for the market. So keep in mind, folks, in my opinion, the jobs number today was not good. The initial claims, again, is what was put out there at 8:30. Also, you had continuing claims coming out at that same time frame, and that was also up pretty dramatically. Now, the interesting thing about continuing claims is that you see basically that continuing claims are going to fall off over time because people can only keep benefits for so long. There's only so long you can continue to take in unemployment benefits before you fall off the cliff there and can no longer collect. So bottom line is, for that number to increase tells me that there's also a certain amount of people that are getting off that jobless or continuing claims number, and then there's also other people who are just not finding new jobs. So yes, you're losing some because they can't collect those benefits anymore, but you're not seeing jobs being added in this market, and that is a scary thing, folks. So again, that number at 8:30 a.m. today was actually surprisingly bad, the way I analyze it anyways, and we'll have to see what next week could be. Next week, again, you'll have this, that'll be from this week, and you have to look at that as a possibility of being an okay number as well, maybe a little positive, only because, again, I can't imagine that many bosses laying off a ton of people this week when you're leading into a holiday weekend. Almost all the traders I know are away on vacation already, and it'll be interesting to see. If that number's bad again next week, I really think that there could be some major issues for this market down the line. Okay. Having said that, what did the market do this morning? The market was trading higher before those initial claims on the back of China. China up 5% last night. In addition, you got retail sales to come out and be pretty positive. Take a look at the RTH. RTH here having a huge day, up $1.50 to $86.35. That's a monster day on the RTH, which is the Retail Holders Trust. So the ETF for the retailers, basically. So a monster day on retails. That all got the futures going this morning to where they were up about 8-9 points this morning, actually, which is a huge move. However, once that jobless number came out, the market did come back in and still stayed positive for a gap up, but just was not up as much as you would have thought. In fact, what you did was you gapped right into this resistance here at around 100 spot 40, which is the lower band of resistance between 100 spot 40 and 100 spot 60. You can see the line right here. That 100 spot 40 level matches up with the highs from yesterday. Look at this line. Hit right here and pierced, right here, right across right here, here, and here. So you know that's resistance. Sure enough, the market opens right there, covers it for 3 straight candles trading sideways, and then ultimately cascades down. We sell off. Where do we sell off? Exactly to the key pivot line we had laid out yesterday in the charts. I talked about this to you guys in yesterday's free video, as well as really telling how the key level is important to our Research Center premium subscribers in the nightly video. But see how you hit here and here, and then bounced off, and then you came down right to close in the same area? This is a very, very big level between 99.60 and 99.80. Big level right down here. You came down, touched it again. You can see touched it here at the first candle, third, or actually it's the sixth or seventh candle of the day, pierced it, and then today again, right down to that same level, bouncing off. So watch that level. Anywhere between 99.60 and 99.80 is a major level in this market on the downside. We have never gotten a close below there at this point, and you want to look for that close to signal possibility of more downside. Now, having said all of that, all about the jobless numbers, the jobless claims, etc., we did get the ISM services numbers at 10 o'clock. Really didn't do a whole lot, kind of came in par with what people had expected, maybe slightly better. The market, for the most part, is in vacation mode. Vacation mode, any week where you have a major holiday weekend coming up, 3-day weekend like we have this weekend, is going to be light volume. Today, as I mentioned, possibly the lightest volume of the year. Tomorrow, depending on that unemployment number, which comes out at 8:30 in the morning, which is going to be huge for this market, if that's not a big surprise one way or the other, by 11 o'clock tomorrow morning, 10:30, expect insanely light volume and just a sideways neutral bias for the market. That's exactly what we have today. That's what we had yesterday after the big down day. We called that dead on, as yesterday was a flat to slightly lower day. Today's flat to slightly higher. You can see we're basically in the exact same spot as where we closed. Right here where we closed on Monday's big sell-off, on Tuesday's big sell-off right there. You had Wednesday, Thursday, today, and you can see you're really sideways these whole 2 days after that drop. Really quite something, guys. So keep an eye on that. Very, very important to understand what the market is. A lot of amateur traders get chop-shopped right around where they just burn out commissions and churn themselves because they think there's trades here. Really, to be honest, look at this chart. No trades. No trades. Minor scalps, maybe. Right here was a great scalping opportunity, and right here on the fall, if you had pinpointed this high pivot from yesterday's highs, that's about it. So a short here maybe, and a long here, that was it. So that's 2 trades on the SPY over the course of the whole morning. And you can see since then, you traded up here, you would have sold right here at the resistance and then been sideways the rest of the day, neutral in cash. And that's really, as a trader, what you want to be looking to do. You have to remember that. Now, interesting things going on. Gold continues to be strong, guys. Take a look at the GLD. Highs of the day today up $1.53. This is major on the daily chart because you're actually taking out this high. Now, what's the next level up there? Well, I can't go into it too much, but we actually came up and almost touched the next level right here. That is resistance. I called it out to the chat room, guys, before I left for lunch, and continue to hope they, and again, I know some of them already scalped off that level. That's that 98 level was the next spot. Sure enough, we hit 99.94, and it pulled back to about 99.70 here on the backlash off of that resistance. You got to know your levels, but look at this beautiful break, and I'll show you by going back even further. Take a look at this. Go back to right here. Here's your next level. This is what I told the chat room to watch for today. And I'll put it in for you guys, and I'll show you how accurate it is. There it is. Let's scan right back. Look at that. Perfect. Right up underneath. Just touching it, gently kissing it, and then falling back down. As you said, about 30 cents, 25-cent gain on that short right there. Very obvious. Now, again, we're looking at the daily chart here. I don't usually show you guys the daily, but what the heck. Today's a light trading day. We'll show it to you. All right, going back to the spiders. Let's go back to the spiders now. Just talk about some major levels on this market. Now, you can continue to see this 99.40-ish level, 99.35 to 99.50. Very, very important level. This pinkish trend line standing right across. That's where we opened today. That's the highs from yesterday. And notice again, you kissed it right here. Kissed it again right here, and are now coming down. Now, you have a little bit of a necktie right here on the charts, which should be a little bit of support right here at 100 spot 20. 100 spot 20 is another little minor level. Nothing major, though, right there. The big levels of the day will be this. 100 spot 30, 100 spot 40, we're going to call it, and then 99.80. 99.80 on the downside, 100 spot 40 on the upside. That's a 60-cent range that we've been in today and yesterday. Same 60-cent range both days now, and you're seeing that. Now, in general, I don't expect a major move the rest of the day. In fact, if anything, you just give it a neutral bias on these type of days where there's no volume. Sometimes you can look for buy programs, although interestingly enough, little change in character yesterday. We saw a sell program into the close. Look at this. Not a major one, but a downtick nonetheless, selling into the close. Today, it'll be interesting to see what type of action we get as the volume continues to be unbelievably light in this market. All right, tomorrow again, folks, what you're going to watch for is that unemployment number at 8:30 in the morning. That will be huge for this market. They're expecting 9.5%. Hard for me to understand, and this is going to be, I'm going to be flat out truthful, guys. I got to believe that a lot of these numbers are fudged because, for instance, last month, we lost jobs, but the unemployment rate came down. This month, we've so far averaged about just under 600,000 initial claims every week, and that's equaling out to about 2.4 million over the course of the month. There's no way that we added 2 million jobs or thereabouts back to the payroll in hiring to offset that. So maybe 1 million, I believe. Even that would be a stretch. So we'll see what the unemployment number is tomorrow. Again, wouldn't be surprised if it comes out better than expected, or at least on par, but we'll watch to see. It will be a major mover. Take care. Come join the Research Center. We hope to see you soon.